Hello everyone, welcome to my channel. In today's video, we're going to talk about SPACs. This is Semi, so let's get right into it. What is a SPAC? The first topic that we're going to talk about to understand SPACs, special purpose acquisition companies in details. And then I will share a few examples of recent SPAC companies with you. And the most importantly, two big advantages of SPACs for investors. Lastly, I would like to share which SPAC stocks that I have in my portfolio as of today. I hope you enjoyed today's video, and if you do, please hit the subscribe button and turn on the bell so you can get each and every video that I will create for you guys. And I would like you to click the like button. It really helps YouTube algorithm a lot, and I really appreciate you doing this. So let's start with the first one. What is a SPAC? Purpose acquisition company is a blank check shell corporation designed to take companies public without going through a traditional IPO process. SPACs allow retail investors to invest in private equity type transactions, particularly leveraged buyouts. A SPAC is created especially to pool funds in order to finance a merger or acquisition opportunity within a set time frame. The opportunity usually has yet to be identified. In order to get into details, a SPAC company, as you can see, which usually most of the SPAC companies now has a starting fund of between $250 million up to $4 or $5 billion. So that money by an investor or investment company who is creating that SPAC company, special purpose acquisition company, is being determined to keep this money in the pool while they are looking for potential target companies that they would like to merge. We will talk about a couple of examples in a very short time, and that money is simply the amount of money that will be given to the company that they will potentially be merged in order to invest that money into their business for growth or any kind of purposes. So here, as you can see, it says it allows retailers to invest in a private equity type transaction, which this means that we will talk about this advantage. This is a huge advantage. Most of us, as you know, some people are not accredited investors. They cannot, or not a part of a hedge fund or an investment firm. They cannot invest in companies pre-IPO while these companies are actually private companies. So a SPAC is a very interesting and beneficial way of investing in those companies. Potentially the SPAC company will merge that private company, great way of being able to invest in that company before it become public. So this is what it means here. A SPAC is created especially to pool funds in order to finance a merger or acquisition opportunity with a set time frame. This is a really important part, because most of the time when you or any of us identify a SPAC company that will potentially merge with another company, and it takes time, but there is a time frame for a SPAC company in order to find that potential merge or merger and acquisition. So that is really important, because let's say you've identified a SPAC company right after they actually created that company, let's say in December this year, and then it is really critical to know that when this company will potentially merge. It's usually between 1 year to up to 2 years that they will, within that time frame, they will find a company to merge with. So it's just a couple of stages. First, they create the SPAC company, and then let's say the process and everything takes between 1 to 2 months, and then they start looking for a company or a couple of companies potentially that they can merge with, and it may take between 2 months up to 6 months or more. I usually find out that, based on my research, that it usually takes around 6 months, but it really depends. It really depends on what you're looking for, what these SPAC companies are looking for, and in terms of a potential private company that they will merge with. And for that reason, it says the opportunity usually has yet to be identified. So this is what SPAC means in a very short way. So the second, a few examples of SPAC companies. The first one that you see here, PSTH, the ticker symbol, Pershing Square Tontine Holdings Limited. This company has been on and And Bill Ackman, as you know, is a very popular man. He has been working. He worked in the stock market industry, investment industry, a very, very long time. So as you can see here, Pershing Square Tontine Holdings has actually started with close to $4 billion. And since they, as soon as they started the company with the $4 billion cash, but since the SPAC company is in the market, they are now, since probably last 4, 5, 6 months, in the early stage that they're looking for a potential merger company. So for that reason, during that period of time, the SPAC company's stock can actually being traded in the New York Exchange. So for that reason, their market cap went up a little bit. So they now were $1.38 billion. So this is a really good example for an early stage SPAC, because they're not able to find a company that they will merge with. But if you go to their website, Pershing Square Tontine's website, you will see that they're explaining what type of a target company they are going after and what are their metrics that they're looking for from a company. They're looking for simply a unicorn. Based on my research, I really like the structure of the PSTH, and I will soon, as I build cash, will make an investment in their company for a potential 3x to 4x in a short period of time, between six months to a year. And after that, most of my investments are a long-term opportunity, but we don't know anything yet about which company that they're going to merge with. I first would like to wait up until that time before I make any decision, because you will actually be informed. We will all be informed by when or with which company they will be merged with. It's most of the time better to get into those SPACs early when they're stock price is around like $10 to $20, and which many SPAC companies stock prices starts around $10, and in the PSTH situation it actually started around $20. So it's usually the better if you really believe in the structure of that SPAC, if you really believe in the management and you trust them, it's usually the better, because you're going to have better upside as soon as they merge with or after the merger. It really depends. So QuantumScape Corp is another example. This company actually is being backed by Bill Gates. Bill Gates made an investment, some amount of investment in that company along with Volkswagen, and Volkswagen also guaranteed a certain amount of purchase from this company, because this company is actually an American company that will potentially produce solid state lithium ion batteries for electric cars, which is if you go and look at their presentation on their website, QuantumScape's presentation, this company is trying to build a new battery that has a technology can actually increase the lifetime of these batteries, and also the charging time down to 15 minutes, and then also how long that battery can last, which is being determined by, let's say, between 300 miles, which is usually the lifespan of these batteries right now in the market. But they are saying that will be a lot more with their battery technology, and may go up to 600 miles. So for that reason, it's really important. As you all know, the EV market is really popular right now, and a very growing high growth market, and for that reason, and QuantumScape has a huge upside, which they've actually proven that in the last couple of months, because QuantumScape was that private company, the KCAC SPAC company, KCAC their sticker, KCAC was KCAC, the SPAC company found QuantumScape in order to merge. So the QuantumScape is another example now that after the merger, it actually end up being QuantumScape. Unlike PSTH is a company in early stage right now and found their target company to merge with, but the QuantumScape is that target company that KCAC found. KCAC was the SPAC, and they found it, and then now it ended up being QuantumScape within probably the last 1 year, and KCAC found them, and then they've had the agreement and everything. They worked on it and filed their reports and everything, and QuantumScape yet to be now the public company. Again, if you look at that chart here, pricing chart, KCAC was here. They merged right around like here just recently in the last 2-3 weeks, and then before that the Quantum KCAC price was around $10, right? And with these spec companies, as soon as they merge, everything is actually being transferred into a new company, QuantumScape, and the ticker symbol also changes. In this situation, it is QS. And as soon as it actually merged, and the stock price started going up significantly, I was personally, after looking at QuantumScapes right around here, QuantumScapes, because KCAC actually announced that they're going to merge with QuantumScape right around here. It's always a couple of months earlier than the announcement comes out, always a couple of months earlier than the merger date. So you will have time to research that company that actually SPAC is trying to target. So the QuantumScape presentation, I've looked into it. I really liked it. It's an early stage development company that is building the technology, and they will potentially start manufacturing and producing those batteries around by 2026 or 2025. That you can see all of that stuff in their presentation. I love the company. I love everything about it. I love that Bill Gates backing it up, and Volkswagen also do, and also there are guaranteed purchase orders, and everything is intact with this company. So I was thinking about making an investment around here, but at the moment, and it just slipped through my mind, and I couldn't finalize and purchase the stock. But it just right after the merger, it just went up significantly in a very short period of time. Right now you can see it's around 100, went up to all the way up to $100 and $120-$130, and it just came down a little bit. It's a correction. But I'm just going to follow up this company, since there's a long time that they will work on their technology and everything. And I believe that we're all going to have, if we would like to invest in these type of companies, we will have a tremendous amount of time in order to find a right entry point. So, but I just want to give you these two examples so you understand the early stage of a SPAC versus now turned to be a actual public company with the QuantumScape, which was also a very popular one. So let's go to the next step. And two big advantages of SPACs for investors. This is the most important part that I actually would like to share with you, because there are some advantages that you would normally wouldn't be able to get unless you invest in a SPAC stock. So the first one is low risk. In case you can find and identify those SPAC companies when they are just being created and start being public as a SPAC company, and in most scenarios their stock prices starts around like $10, very rarely $20, like PSTH, as I said before. And if you can identify those SPAC stocks early when they're like $10, $12, $13, $14, $15, a lot, earlier than before they actually announce which company that they're gonna merge with, there is the risk factor, you losing money or the amount of your investment will go down, is very limited. Because let's say you found and identified a SPAC company, and the current stock price that you're looking at around $13.95, their stock prices was 10, and you purchased, let's say, one share here, it's $13.95. The most this can go down is $10. And even if they cannot find, which is potential, but I haven't seen any SPAC company, actually couldn't find any company to merge with. And even if they cannot merge with anyone, what is going to happen is that they will just announce this and they will give your money back, but they will give you a $10 back. So you will just lose $3.95 if you buy that stock when it was $13.95. If you buy it when it was $10, there's nothing to lose. Literally nothing to lose, because if in case they're not going to merge with anyone, you will get the same amount. And For that reason, up until they actually merge with that company or after, before that stage, you have not really a lot to lose in case you can invest in that company early. So that's a really, really important point in order to manage your risk factor. So the second one is pre-IPO. So that in order to invest in any private company, you literally need to be an accredited investor. If you don't know, just please go Google and type what is accredited investor. But in this scenario, if you identify any SPAC that you like and you would like to invest in it, it's literally just like actually making an investment to private company before they actually go public. Because in this scenario, you're investing in a SPAC company. In this scenario, actually, I have some investment in this STIC, STIC, which will be merging with the BARKBox, BARKBox.com, and in 2021. And I've invested some amount of money here, and actually will be going into a BARKBox, which is BARKBox right now. I cannot. If there was no SPAC, this STIC company, I wouldn't be able to invest in BARKBox because they're a private company. And for that reason, this is a huge opportunity for anyone who is really interested in this type of private companies, and before they go public, they can actually buy some of their shares through that SPAC stock, and then in this scenario it's STIC, and as soon as they go public and they merge, and then they will be public, and their stock ticker will be BARK, BARK, and which I love. It's really a fun name and it's easy to remember and everything. So then after that, after they merge, and their sticker will change, but all of my investment will be transferred into that new ticker, BARK. So for this particular stock, I really think that there's I've entered, it was right around here. I really think that there's a huge upside. It's an e-commerce business. I have a certain amount of experience in e-commerce too. I understand their model and everything, and there's a huge upside for me. This is a long hold for me. I put around a little over 2,000, which we'll look into it right now. I don't remember the exact amount, but I am planning to hold this at least 5-10 years. So it's really critical for everyone to know, really important, these two big advantages of a SPAC for investors, because someone like me, I use some of my portfolio, some portion of my portfolio for these type of huge growth, big potential stocks that I am invested in. So I expect at least 10x from these stocks in next 3 to 5 years. So let's go to the last part. Which SPAC stocks I have. This is my small portfolio that I've actually picked in last month or two. I picked a couple of SPAC stocks that you see here. Some of them, most of them in this scenario is actually announced that they're going to merge with those specific companies. I believe in these SPAC stocks, and those are my holdings. STIC that I already talked to you about this. Told you about this. It's going to merge with the BARKBox, and LGVW. This is also backed by Bill Gates, and I started investing in that a little while ago, and it's already up 20%, and STIC up 21.67%. IPOC is up about 18.38%. I've invested in it like 2 weeks ago. And BFT is about 7.37% up. It will merge with Paysafe and IPOC, Clover Health, and LGVW, Butterfly. LGVW is simply a medical device, like for ultrasounds and things like that. And IPOC is trying to change the healthcare system for simply like elderly people that needs better healthcare system. So BFT is merging with Paysafe. Paysafe is a payment system that has lots of for many people. So my holding here is not really a lot, but I am planning to build my position here as we go. And this is a very, very small company right now that I don't share the details with you and merger and everything, because I would like to, wrap my about this company in order to share any details with you. So I hope you enjoyed today's video, and if you do, please hit the subscribe button and turn on the bell so you get every notification about each and every video that I will create on YouTube for you. And please like this video. It really helps the YouTube algorithm a lot. I appreciate you doing this. So thank you so much. Have a wonderful day.